Fintech infrastructure and crypto custody firm Prime Trust is planning a major expansion of its services after a $64 million Series A funding raise. And joining us now to discuss is Tom Pageler, CEO of Prime Trust. Welcome to the show, Tom. So a lot of people don't know about Prime Trust, but you keep the wheels running for a lot of neobanks and crypto exchanges. You offer payment, settlement, KYC, and liquidity APIs that cover the full infrastructure stack for clients like Binance US, Kraken, Bittrex, and Strike. So in your words, very simply, can you explain what Prime Trust does?
Yeah, sure. Thank you for having me. Prime Trust is an infrastructure company that powers fintech and digital asset innovators. And with this announcement of our round, we're bringing our one-stop shop API stack to even more innovators. We're a regulated trust company with an API platform that allows companies to launch quickly and scale securely.
And what are you planning to do with this money? How are you making allocations?
I think, as you've seen, we experienced over 5x growth over the last year. So really, most of the money is going to go into employees, especially engineers, product leaders, and compliance folks. As you said, we do AML, KYC, Bank Secrecy Act for many of our customers. And with just the increased demand, the market, really taking off, we just need to hire more people. We are hiring for those watching, but we do need to hire more and more. It's really about just putting more people in there and continue to scale and offer the services that our customers rely on.
So, Tom, for the folks at home, KYC, know your customer, AML, anti-money laundering. You offer different level. Do you offer different levels when it comes to providing that to exchanges? Is there still demand for lighter levels given the kind of regulatory environment we're coming into in Washington?
Well, we're a regulated entity, so no matter what, we're going to do the Bank Secrecy Act, which is to know your customer, the anti-money laundering. Depending on the customer needs, we can do it on their behalf. We can share the information. We can integrate with them different ways. It all depends on what the customer needs. And it also depends on kind of the regulatory area of the customer. Some customers are regulated themselves. They have to do it themselves. With the regulatory emphasis, it makes it actually easier. More regulation's good. I think everybody saw Binance CZ saying, hey, he'll step down for better regulation, all that. I think the industry loves regulation. It just makes it more legitimate, makes it easier for us to grow and scale.
Yeah, as we're seeing now with Binance, their customers with lighter versions of KYC can only take out about a couple of $1,000s worth of Bitcoin. Is that something that you think is going to help your business?
Yeah, I think it's what you want to do is make it so that there's controls in place, everything's risk-based. You make it easier for customers to get in there, but do it securely, know who the customer is, make sure that you keep any kind of fraud out or any kind of issues. So by offering customers to get on quickly as they pass more and more regulatory scrutiny and things like that, it can allow them to do more transactions. But the whole game is to get people in there, people using the systems securely the same way any bank would, and then basically continue to grow. And as the whole market, as we see, continues to expand, we'll see more and more people in here, and we'll be able to do more and more with the whole infrastructure.
So you mentioned that regulation is considered good, and I think you're right. A lot of people in the industry do see it that way, and that it brings clarity and some sort of formality to the industry. However, recently in the past few days, we've seen U.S. lawmakers expressing what I would say are pretty negative views of the cryptocurrency industry. Right, like they're basically portraying it. There was a hearings this week in which we heard cryptocurrency portrayed as sort of shadowy and funny money and fake populism. And I guess my question for you is, how concerned are you about that trend where we're seeing U.S. lawmakers, basically expressing what probably wouldn't be positive intent toward regulating cryptocurrency?
We're not really concerned here at Prime Trust. We've hired an executive staff that has experience throughout regulatory security bodies such as the OCC, SEC, Federal Reserve, Department of Justice, U.S. Department of Treasury, Secret Service, Wyoming Banking Division, and working for banks such as JP Morgan, American Express, PNC, Bank of America, and Visa. All of that relied on a repeatable, very clear process. So as lawmakers talk about want to make things more regulated and make it so that there's a clear process to get into the system, track things, and understand who the players are, that is great for the industry. It's great for everybody. We want legitimate industry in here. We want this to scale. It's quicker, it's faster, it's easier. This is all great for us.
So Tom, outside the United States, do you see other countries, is everyone trying to get on the same page and same standards when it comes to crypto, KYC, and AML? Do you think that there'll be kind of like one set standard for, let's say, the major markets? That'll make your life a lot easier, your job a lot easier, of course, but would also mean that all these exchanges will work off from the same hymnal, if you will.
I think globally we see differences in different regions. One of the ones that's probably the most clear and easiest to follow is Germany. The BaFin group there, which is their financial regulators, are doing a great job of making it very clear. So it's really easy to operate in an area like Germany. As you go to other countries, there's still regulatory issues coming up. It's not very clear how to operate. At Prime Trust, we really focus on what the U.S. demands. We're a U.S.-based company. So if anybody is coming from a foreign country or anything like that, you can operate here as long as you can pass the necessary requirements that the U.S. regulators put on us.
So if crypto companies do have trouble with getting the licenses and the regulatory approvals needed to run their businesses, they go to Prime Trust. Is that correct?
Yeah, Prime Trust, as I said, we're a one-stop shop. We've been actually in the space since 2013. We started in the crowdfunding space. We got into crypto a little later. That makes sense. Crowdfunding is the Reg A, Reg Ds, Reg CF, Reg crowdfunding came out of the Jobs Act. It's basically digital representation of fractional shares of a company, similar to the way crypto will be handled. So we've been in the industry a very long time. We're regulated out of the Division of Banking here in Nevada. We're fully licensed trust. We're audited by Nevada. That's what we offer. So if someone comes and builds into our APIs, they get the proper regulatory requirements through. It's a regulated entity. They're able to operate on our rails. That's the exact play that we're doing. And as I said, we've been around since 2013 in digital assets, so it's helped us to have a pretty deep history in this space.
So Tom, of course, we're hearing a lot about KYC issues in stablecoins or the lack thereof in some cases. Do you see that as a growing business for you guys? Do you think that there'll be demands for more KYC? I mean, obviously you're going to say yes, but realistically, do you think that that's going to make a big difference? What do you see happening there?
We've been in stablecoins since pretty much we entered crypto. We do believe that, again, regulation is good. I think that you'll see kind of a crackdown a little bit more to make sure there's probably stronger auditing of stablecoins to make sure that there really is a one-to-one, that they actually have the assets backing the coins. I think that'll continue to happen. I think that's a great thing. Obviously, as a trust, any customer that we work with, we ensure that the funds are there that back the coins, anything that's minted. There's a one-to-one. That's all what we do as a trust company, that we have to do that.